Everybody, welcome to Digital Asset News. Today, we're going to talk about what is noise and what is not noise. And the first thing we're going to talk about is this is noise. And we're going to talk about Binance versus Mr. Wonderful Kevin O'Leary. There's been some accusations flown around about who is lying and who is not. And I got to tell you, somebody's lying. Then we're going to go over what is not noise. And this is not noise. Binance audit, why ETFs are denied, what causes bottoms, hint its liquidity, and what you can do right now. It's more important to focus on the things you can change rather than things you cannot change. And lastly, we'll talk about some positive news, a city-ran crypto exchange coming about with Binance and Crypto.com already on board. And lastly, we'll do a little Q&A and talk about my friend Jerry's Patreon. And speaking of which, let's bring in a friend of the show, Jerry Hall. Jerry, thanks for stopping by.
Oh, perverted. Thank you, Rob. Nice to be here, young man.
Thanks. So you can see in the background, that's Jerry's Twitter account. You can follow him at Jerry V. Hall. And I will tell you, that's one of his houses that he is building as far as property management goes, one of 12 over in Costa Rica. Jerry, not a bad place to live, huh?
No, especially when you earn in the dollar, right? So any of us that are earning in dollars but spending in a different currency are understanding the advantage to the strength of the dollar. It's really kind of a wonderful thing. Do you get that in Puerto Rico by any chance, or is everything just exorbitantly expensive because of importation?
Like I was telling you, everything's exorbitantly expensive because of importation, except for Medalla beers. You can buy a 12-pack for $11. All right. So speaking of that, speaking of buying things and what you can actually get for and the value of such, this is we always, before we start on the show, the big stories, is take a look at Satoshis. Yeah. Just so everybody knows, and this is something to always explain to friends and family if you can. Right now, Satoshis, the USD converter, for $1, as of yesterday, you get 5,732 Satoshis. However, Jerry, did we not see a little dip today?
We did. We saw a dip 5,900, I think. You can get 5,900 Satoshis for $1.
Yeah, exactly. 5,921 Satoshis for $1. In 4 or 5 years, people are going to come back on this channel and they're going to look, if they ever come back and watch these videos, I'm like, wow, 5,000 Satoshis. You know, you only get like 1,000 of those, 2,000, 3,000.
You remember the commercial that used to go, I'd buy that for $1?
That was it. That was it. That was RoboCop, the first one. And it was a great movie, and it should have won an Academy Award. Just kidding. So here we go. Let's talk about what is noise, what is not noise. And this is actually pointed out to me by Jerry. And what's going on in the background is a little spat between two superpowers, and somebody's lying. And actually, I can prove that somebody's lying right now. So I'm just going to show you, bring you up to speed. This was CZ Binance, and he was talking about, or changing things out, excuse me, from Binance. And he's talking about what was said when Kevin O'Leary came and testified before Congress. So just take a listen.
He says he didn't know that Binance was a shareholder of FTX. So he invested in FTX without looking at the cap table. But he was very specific in the way he counts for a transaction 2 years ago. So that's kind of contradictory. So I think Calvin's a liar. So I think he's lying about a bunch of stuff.
Yeah, so just wait. So Kevin, to not be outdone, came on, this was on Squawk Box, on one of the earlier syndications. And the question was, of course, hey, are you lying? What's going on here? And Jerry pointed this out to me. Jerry, because you watched the whole Congress hearing, what was the tone for Kevin O'Leary when he was talking about Sam Bankman-Fried and FTX?
It was like CZ intentionally tried to put FTX out of business.
Sure.
And it was this really heavy emphasis on an FTX competitor.
Sure.
Not the blatant fraud that was occurring at FTX. It was, to me, Kevin is so, I don't know why. It's like, hey, look at this over here while I'm picking your pocket. You know, it's one of those kind of things. It was really odd.
It was really odd. So take it. Yeah. So that was the hearing. Now take a listen to Kevin over here on Squawk Box.
This drama. You are an actor in this drama, and you had a front row seat to Sam Bankman-Fried literally up until the very end. Given what you know about him personally, and given what you now know about the numbers and what has happened there. As you said, you're trying to get money back for creditors. What do you think happened? Do you believe this was a fraud?
I don't have the facts. John Ray doesn't have them yet. He's going to get them. I'm looking for my records. I'm willing to fund a forensic audit of our accounts. I'd like to know what happened, obviously. There's a lot of bad things that have been alleged here, no question about it. And some of them are going to be true, likely, because there's no money there. Somewhere, the cash is gone.
Right.
And so this is the beginning of a journey. You're right. I did speak with him prior to him going to jail because I'm just after the facts of where the cash was. Now, let me address something before we go any further. Yesterday on the air, CZ called me a liar. That suggests that I perjured myself in front of the U.S. Senate for 2 hours this week. I can assure you that is not the case. Another little parable here you should understand. When I was young, my birth father was Irish, put me on his knee, and every Irishman will know this. And he said, son, never call an Irishman a liar.
Okay, great. So then he goes to that, and it's a pretty good story, but we got time. There's a lot of things to do. So right here, at first, Jerry, who told us, okay, what Kevin was talking about more was like, this didn't happen. It's all on Binance. They crushed him. And now it's, well, I don't think we have all the facts, which I got to tell you is not wrong to say. Is he, I mean, Jerry, is he wrong to say, look, we need all the facts first?
I think that this should be in the hands of attorneys and courts.
Sure.
And Twitter personalities and YouTubers are going to have their fun with it because I mean it is a story. It's entertainment. And believe me, if your portfolio looks like mine after the last 12 months, Lord knows we could use a little entertainment. I've just, I've had my ass handed to me this year. I'm sure you have too.
Yes, a lot of handling of asses in this market, that's for sure. So I will tell you, it's one of those things that you have to take a step back and go, okay, well that makes sense what he says, but when I said that someone's a liar, listen to this. So this was another snippet that he did also on Squawk Box, an interview by one of the other co-hosts. Just take a listen right here. This is about a minute or so.
Time goes so quick. It seems like only yesterday, I was totally arguing with you on Squawk Box. You went from Charlie Munger's view on Bitcoin to Michael Saylor's view on Bitcoin. And I actually kidded you about it. I said, who are you? You may know nothing, but you're never in doubt. You're so strident when you said it was just worthless and rat poison. And then 6 months later, you're like this Bitcoin bull. So I didn't understand that conversion. Did that conversion coincide with the 15 million that you got from FTX?
No, I was investing 3.5 years earlier than that. I changed my mind back in early 2018 when I saw the regulators in jurisdictions like Canada, Switzerland, and Abu Dhabi start to change their minds. But I'll tell you what really got me investing, Joe.
Early 2018, right? Now, Kevin could have gotten some dates wrong. I mean, it happens. I forget things. I forget where my keys are. I forget certain dates when I invest into crypto. I get you, right? But early 2018 is when he changed his mind, started to invest. However, this is a nice little article from May 14th, 2019. Mr. Wonderful Ken O'Leary calls Bitcoin garbage and to take down the whole crypto industry. And I got to tell you, it's that old adage, watch what they do, not what they say. So in the background, when we hear about these things where like, oh, Bitcoin is dead and Bitcoin is dead today and Bitcoin is dead tomorrow. And of course, everything's going to collapse. Just remember that it's not the case. Just take a look at something like this. Bitcoin is dead. And we hear this all the time. Crypto is dead. Bitcoin is dead. Here's the cumulative value trade. Here's the P&L, adjusted market cap. It's all the same thing over and over again. So I'm not going to say that someone's lying because they've already done that for me. But Jerry, where do we stand here as far as the talk about when we talk about the noise? Because this was just noise. That's really what it comes down to. This was noise that doesn't really affect us.
At the end of the day, and in 2 years from now, we won't be talking about the Kevin O'Leary interview on Squawk Box where he got a date wrong, right? I've misquoted dates. Matter of fact, in the pre-call with you, I said 10 to 15. You even said 12. I've got 10 lots in Costa Rica. I'm going to do 10 properties. But, that's not the point. The point is, what I think we'll remember from this year is, hey, we got to live through another down cycle in an industry that is inevitably going to win because it's stronger, faster, better. And stronger, faster, better generally always prevails. So, it's kind of that simple. I think a lot of this is noise. For those of us that need a distraction, hey, jump on in. And for those that are done with it, there's a lot of other stuff to tune into that's really beneficial and really important. And that's one of the things I love about your show is you give us a little bit of both, right? Hey, this is what's going on. You might want to take a look behind this curtain, but hey, there's also this stuff happening, and let's focus on that because that'll drive your train forward. Kevin O'Leary will not push any of our lives forward.
This is true, which leads me to the next point. Great segue, Jerry. Excellent. This is the things that will affect you. And these are the things that we talked about before. I know everybody, on this show, we have the rules. They're partially obscured by my friend Jerry Hall here. But the second one right there, nothing on exchanges. This is a great rule I've lived by for quite some time, especially after we learned our lesson on Celsius, on Voyager, on BlockFi, and FTX, and a host of others. I think that's another shoes to drop at some point. So this is what's going to affect you now. Tune out the noise. This is what we got. So we had talked about this yesterday, or 2 days ago, I want to say. Binance's proof of reserves. This was an article about the proof of reserves that was put out by Binance. And everybody said, this is great because it's not just proof of reserves, it's proof of liabilities as well. However, we talked about this. There's a couple of red flags. And not that I'm saying that it is a problem, but I'm just saying be careful. John Reed Stark, senior lecturing fellow at Duke University School of Law and former chief of the SEC's Office of Internet Enforcement said this, look, Binance's proof of reserve report doesn't address effectiveness of internal financial controls, doesn't express an opinion or assurance conclusion, and doesn't vouch for the numbers. I worked at SEC enforcement for 18 plus years. This is how I define a red flag. And then today, this is what happened. Mazars, who was the auditor in this case, they paused all the work for crypto clients and they deleted all the records of what they did for Binance, Crypto.com, and other ones. So Mazars has indicated they will temporarily pause their work with all their crypto clients globally, which includes Crypto.com, KuCoin, and Binance. And this means we won't be able to work with Mazars. This is what a Binance spokesperson said. Mazars said that it only paused its work for crypto firms related to proof of reserve reports due to concerns regarding the way these reports are understood by the public. Mazars added that its proof of reserve reports do not constitute either an assurance or an audit opinion on subject matter. Instead, they report limited findings based on the agreed procedures, which was what Binance set forth, performed in the subject matter at a historical point in time, meaning anything can change as time goes on. But not to be outdone, to give you both sides, the accounting firm performed a proof of reserves assessment of earlier this month, finding that its Bitcoin reserves was over-collateralized. I believe it's 101%. Auditor also found that KuCoin's Bitcoin, ETH, USDT, and USDC reserves were all also over-collateralized. Jerry, what am I missing here on this one? Is this something to be worried about, or like no big deal?
Here's the thing. There is standard operating procedure, right? Exchanges should be treated just like stores, in my opinion.
Okay. Yeah,
you go to the store with your money, you buy what you want, and you take your stuff and you go home. Simple.
That's thanks. I got to steal that. It's perfect. That's how we should do it.
It's really, really simple. Here's what's interesting. I think that the simplicity of it has been lost, right? We get lost in the technology and the complexity, when the truth of the matter is the world is none of us have ever dealt with bearer instruments before, right? It's very rare that we deal with things of great value that whoever's holding it owns it. Your home, your real estate, that's titled. It's held with title companies. There's 15 different authorities invested in the chain of title. Who owns that? Cars have titles. All these things of value have titles that are either held or registered with somebody. All your stocks, your bonds, your investments with Charles Schwab, these are all things that are investments that are held in custody by somebody else. Crypto is that we're coming back to bearer instruments. If you have it, you own it.
And how do you, and well, Jerry, how do you own your crypto?
Well, I use my own self-custody wallets. Like I
Okay.
have a range of things that are browser extensions. I
Now-
have old wallets. I even have, for those of you old school veterans, the old Ledger Nano S. I'm an S guy because I'm old.
Huh.
You kids, you young people are using the Tezers and Nano X's. Good for you. I'm old.
Oh, there's even a new one coming out, Jerry, and it looks pretty
Oh,
cool.
the
The stacks.
stack. Ooh.
Now that one I'm probably gonna buy because I want to show everybody how good it is, and just to show it off. So okay, so just so we know what noise, what's not noise, when we talk about like Binance and things like that, we understand that that's something that can really affect us. So on the show, everybody knows my stance: take it off exchanges as fast as you can. If you're leaving it there, you're playing with fire. But it's up to you to what you want to do. Also, for us taking a look at things that is not noise. This came out. Why the SEC just rejected another grayscale Bitcoin ETF. And let me stop this music. Sorry. Okay. So, and tell me where I'm wrong here, because this is actually, the SEC is, I think, right. The SEC has repeated its stance to reject Grayscale's bid to launch a Bitcoin ETF. SEC says such products are prone to fraud and manipulation. Jerry, is that true? Could we be dealing with fraud and manipulation in the crypto market?
If the FTX scandal hasn't taught every single human being in the crypto industry that crypto gets levered up and leverage is used to manipulate the price, if we haven't learned that lesson from FTX, go back and study it, because it's been a glaring course, right? A literal college course on the manipulation process of crypto. I have 100 cryptos, right? I have 100 of this coin. There's only 100 of them, and I have 100. Now I'm going to put 10%, 10 of them out into the free market and let you fight about. I've got 90 of them sitting over here locked up, never going to get used.
Right.
I have 2 of my buddies go get 3 each. Now they have 6 of the 10 that are floating, and they're wash trading back and forth. What does that do? It drives up the price of the coin, which drives up the market cap, right? And now all of a sudden, if you have a market cap, you have the ability to collateralize and borrow against that value. This is a mechanism that goes back forever, right?
You know what? And before just to butt in, what was crazy to me is that, with FTX and the leverage, even though they had a winning advantage, Alameda Research and FTX, because they had the order books, they had all the data, they still lost out on the trades. It just, to me, I just found it amazing.
Well, they're not good. They weren't good traders. They were kids having a party.
Oh, it's
We
insane.
were young once. Can you imagine having access
That's a
to
long time ago.
billions of dollars with no controls? I mean, Rob, you've always been a good person with good morals, but I can't imagine the 20-year-old Rob not succumbing to some of the things that when you're
talk to my wife. I was a real a-hole back in the day. Yeah.
I can imagine. I mean, if you were given, you just sign $1 million out, no problem. Just take $1 million out of petty cash.
No, I already,
$2 million, $3 million.
I had my moments. It's a story for a whole other section of what happened there, but why I am humbled now. But that's a good story to tell at some point, but not today. I'll tell you that. But to finish up this story, so fraud and manipulation. Grayscale claimed over the summer that the SEC was applying for an unfair double standard by allowing the Bitcoin futures ETF, but denying proposals for spot ETF. The SEC responded like this. They said, look, the futures is closely monitored by the CME, the Chicago Mercantile Exchange. Spot ETFs lack the level of federal oversight. Jerry, the question I have for you is this. Isn't that their job? to oversee these things? Why are
Can
they
you
saying that?
imagine? Can you imagine? And of any of the ETF submissions, the grayscale, because they already have the trust. See, it's not like they don't have, I
Right.
mean, they have a trust that has records going back from its inception
Right.
of maintaining and holding all the Bitcoin that they say they have, could be
Mhm.
audited at any time. The wallets are public record. If the SEC were to grant an ETF, it should be to grayscale. And all of a sudden, now you got a sheriff in that community, right? With all of the checks and balances that come with being an SEC, a security on the New York Stock Exchange or on the NASDAQ or on the American Stock Exchange. There's a whole list of checks and balances for all those entities that if they were granted the ETF status, they would have to meet. Therefore, all the shenanigans with them would go away or any question. But it's not that the SEC is worried about. They're worried about all that stuff. Like, for instance, how much Bitcoin does Binance have leveraged?
Yeah,
How much
well,
the price of this or that and the other thing
right.
affects Bitcoin?
Yeah, we're
There's
going
a
to get
lot
into
of
that.
unknowns. A
Right.
lot
It's
of
not,
unknowns.
and then look at this. I think Grayscale is kind of hurting here because they're, the premium, the discount, we're looking at almost 48%. I think that's the whole thing. They were kind of banking on the fact that the ETF is going to come through, but I don't think it's. I know people talked about it's going to happen. I'm like, it's not going to happen. I've been hearing that same song and dance since 2017. Never happens.
This is an interesting product because this trust can only buy Bitcoin. It can't sell it.
Exactly. It can't.
Now, to me, this is like that glaring neon light that says, hey, if you have an IRA, you have a 401k, you have something that has access to this product,
Yeah.
it's not a bad time to add this to that.
Excellent.
If you have a long-term Bitcoin thesis.
Right. If of course,
do.
if you have, which you do. Well, so, and then this would, moving into this long-term portion, as we talk about not noise versus noise, you would talk to me about what causes the bottoms. What causes bottoms? And we talked about liquidity, and we actually pulled up just some data points just real quick. And we were looking at Ben's website as I steal unceremoniously from his website, shamelessly steal his data. As I look at the 30-year fixed rate mortgage, I think you can find this anywhere, but the 30-year fixed rate mortgage, and of course, with the Fed raising rates, we're looking at a nice, gosh, a couple of years ago, yeah, 2.7% 30-year fixed rate mortgage. Those were sweet times. I think we got, I think our Houston home was around there. Nah, it wasn't. It was like 3%, but now we're looking at 7%. Actually, no, 6.3. Excuse me. As time has gone on, and of course, once the rates go up, then it's very hard to afford that house. You can get a smaller house, or you can just say, you know what, this is too much for me. And of course, this is new single family homes sold monthly in thousands. Of course, when the rates were low, we had a pretty good amount. Now, as we start to dip down, I think that's one of those things as far as liquidity. But this is just in homes. But Jerry, expand on this a little bit. What causes bottoms as far as like liquidity looking at?
Let's keep it as simple as possible, right? I try to just distill it down to its simplest thing.
Right.
Liquidity is a function of debt. The easier it is, right? The easier it is, or the lower the cost to take a loan, the more liquidity or less liquidity will be available in the system. And this is a thing that's applied to governments, corporates, as well as people like you and I, right?
Right.
So when we're looking at the retail segment, it's are auto loans becoming more expensive? Are people buying less of a car because of that? Are people buying smaller homes or just taking smaller loans and having to go into their savings or other investment vehicles, creating, if they're having to liquidate assets, that sell pressure on those industries that those assets they hold, stocks or gold or Bitcoin or whatever. If they're having to sell assets that increase their down payment because they can't borrow as much because the interest rate associated to the loan. Okay. All of those things factor into liquidity. Go to corporates. Corporates have to recycle their debt constantly, which means they have to take a loan today to pay for the money they borrowed before in the past.
Right.
If the cost to borrow money is higher today, that means they can take less of a loan, which means they're going to have to do what? Reduce their overhead, means layoffs.
Right.
Maybe not new product expansion. Maybe they're just stay status quo.
Well, maybe they do maybe they just do one of those things. They go first, they go, okay, we're gonna shut off this spigot and we're not gonna launch. And I guess the next spigot, which nobody really wants to do, is lay off people. Well, some companies do that. But that, I think, will be the next evolution, which would make the Fed happy. The Fed sees the unemployment rate go up. They're like, oh, okay, now we see an issue. And just like we talked about, those rates to borrow a couple of years ago were sweet rates. And now we don't have that luxury anymore. And I think that's what's going to push us into, I don't know if it's going to be a soft recession or a hard recession, but Jerry, where do you see things going as far as this liquidity to cause a bottom going out of it?
The whole mechanism, the entire world's monetary policy is built on a principle of using inflation to pay debts with cheaper dollars.
Okay.
That's the whole mechanism. So if you want to learn, you should learn that so that you can understand how the world works. If you don't understand that, you don't understand how the world works.
Well, it's also, and also starts at the top. I always say it wrong. The Cantillon effect, the Cantillon effect, where
No, the Cantillon effect, you said it right.
Yeah, the bulk of the money goes and starts at the top. Those people slosh around and go, "Thank you, government," and go for treasuries, whatever. And they say, "Okay, we're going to buy up all these assets." They push up the price of the assets. It filters down to the peons like you and me, and then of course we get some of the
we're paying a higher price,
right?
Because we're buying it 3 weeks, 4 weeks, 5 months, 6 months after anyway. So,
right.
What can we all look forward to? Like, what actionable thing can we take from this? Well, we've had a whole year. We have a whole year of economic contraction.
Right.
Right. It's costs more money today to take a loan than it did a month ago. Okay, great. Well, at some point, the $75 trillion that has to get recycled for this year is going to come due. At some point, they're going to reverse their stance. And when I say they, I'm talking about the Fed. I'm talking about the government. I'm talking about the people that set the price of capital, which are 6 primary broker-dealer banks like JP Morgan, Goldman Sachs, the Treasury, and the Federal Reserve. That whole little cartel, they're responsible for the whole enchilada around the globe because everybody's dependent on dollars.
So when is this liquidity get too tied up?
I think we reached the bottom and the monetary policy changes in March of April of next year.
I can wait for then. This was always how I kind of saw things. I kind of saw next year would be kind of more of a slowdown. We might see some economic transgressions or a reversal. We see a recession. I don't know how hard it is, but it's going to have to happen. Then we see unemployment will go up. We see the Fed pivot because the Fed, like, we broke something. Then that caused a little bit of a cascade effect and we have more problems. But then we start to come out of it in 2024 and then hit some strides in 2025. So actionable effects, what we're talking about here is that the noise that we just talked about, right, is great, Kardashian, cool stuff, entertaining, but that doesn't really help us. What helps us is understand what's going on right now and what we can do with things. So we take a look at those exchanges. We go, we got to take our money off. We got to put it into ledger. I got to be a better person. I got to do this for my family and help myself out. Moving forward, we talked about maybe stacking a little cash and going, okay, we're going to see some more downturns. I don't know if we've hit the bottom. I don't know. I still dollar cost average, but not like I used to. But I think if we do start going downwards, which I think we will, but I could be wrong. I'm not a genius and I don't have a crystal ball. I will start to dynamic DCA down a little bit more, but more of the safer assets, which would be real estate, which would be some blue chips, cryptos, which would be the Bitcoins, Ethereums, those type of things, and not get into do something crazy. And then moving forward. Jerry, what did I miss there?
I don't think you missed anything. One of the things I think is really fascinating, and I don't know if they're a sponsor of your show or not, but fractionalized art.
Oh, Masterworks. Yeah. You know what? I'm going to have the CIO on.
That's a fascinating, from an investor standpoint, right? And I don't give a rat's poo-poo about art, to be perfectly honest with you. But from an investment standpoint, the ability to fractionalize an actual asset like a Picasso, that intrigues me tremendously.
Yeah, it does. And I've talked to this to death, and people say, stop talking about it. But I'll just say this. I've got two. I've got a Basquiat and I got a Banksy. It's fractionalized shares. I have it in there. It's registered with the SEC. I feel a little bit better about that. Moving forward, the CIO is going to come on. I got three big questions for him. First of all, we're going to talk about the overhead. We're going to talk about the rates. And we're going to talk about why should we trust Masterworks? Because just because it's with the SEC, because there's been some questions. So I'm going to have them on. We're going to answer those questions. And of course, you guys will be here along with the ride. And then lastly, before we get out of here, there's, actually there's two more things. First of all, Jerry, we had talked about getting retail versus the institutions in there. Can we do it with just the retail and just kind of get us into that all-time high again? Or
No, there's not. The learning curve, it would require billions or at least another billion retail people to come in, and look at how long it's taken us to get 300 million.
Yeah, it's true.
I mean, the learning curve is too steep to reach any kind of real orders of magnitude. You need sovereign wealth funds, you need pension plans, you need governments.
And that comes with how do they get in?
Regulation. I mean, that comes with custodians that check and balance, because there's no way a mayor of a town or the president of a country is going to keep the private keys to their Bitcoin wallet in his head. It's just not going to happen.
That worked out for a couple of exchanges. I forgot the Canadian one, but it worked out pretty well. Everybody lost their funds.
You're right. I do remember that. Started with a Q.
Yeah, Quadrica, I think.
Yeah, that's exactly. Oh my goodness.
So just to piggyback on Jerry's point about retail versus institutions, I kind of thought at some point like retail will be fine, but this of course is the Coinbase Q3 shareholders meeting letter that came out, and you can see the trading volume in billions. Institutional is crushing it just on Coinbase. I'm just going to use that as an example. This is Q3 again.
Oh, look at this.
So Q3 21, 21, 22, 22, Q3, you got 26 billion for retail, 133 for institutional. And it's across the board. You can see that institutions are really what is driving everything. And that's just Coinbase. And to talk about how big Coinbase is on a global scale, there's a website called Nomics, nomics.com. And you can sort things through. Me and Jerry did this, defined by percent of trades or volume. I'm just going to go by volume right now. Volume percentage. Of course, this would be volume of funds sloshing around, almost 42 billion, as opposed to Coinbase, which says almost 2 billion. Jerry, talk to us real quick about why Binance has so much here and Coinbase doesn't have as much over here. Is it just people, global?
One of the things we have to understand is that a lot of the non-regulated exchanges still have leverage. And even though there was a big publicity push to go from 100x leverage to 20x leverage is massive leverage. Binance is a big house. When I say big house, it's a big exchange. A lot of people are using Binance for all kinds of leverage trading, whether it be perpetuals, this, that. I mean, it's massive.
Okay. So we're looking at a lot of, sorry, go ahead.
It's not real dollars. The 41 billion is not 41 billion actual dollars. It's a total volume priced in dollars of the action. And the action is the trades that include all that leverage.
Yeah. And then, you have leverage, and also it's global on a global scale. Like Coinbase is publicly traded company here in the States. Okay. So just wanted to talk to people about that. And that's the actionable events and things that are going on. Now let's just leave off with some positive news. Again, look at what they're doing, not what they're saying, not what Kevin O'Leary says or what he used to say, but something like this. This is pretty cool. Busan, South Korea, wants to launch a crypto exchange by the end of 2023. This is a city that wants to launch a crypto exchange. The city says it hopes to welcome its first crypto trading customers by the end of 2023. That's a good time after we get out of this crappy recession. I mean, if it does come, I'm not saying it is. This is born a little way in the fruit, as most city projects have focused on private blockchains. I don't understand that. Oh, it was because the former president was really leery about Bitcoin and crypto projects. Due mainly to the president's cautious stance, the new president, Mail Kim-Young-jae, nailed it, reported that Busan has pledged to launch this exchange next year and has laid out a roadmap for its projected progress. Busan said it would establish an exchange holding company in the first half of next year and 3 market management organizations in the second half. The city will remain the ultimate decision maker. That's weird. The city will remain the decision maker, but it also sought private sector leadership. I don't know how the city will remain. I'm guessing the government, the city government, because I mean, how could, unless you have to have a whole city vote? I don't know. The city will provide much of the funding, but could seek to sell its stake to the private sector at a certain period of time. Binance and Crypto.com have already signed collaboration deals with Busan, likely hoping it will keep and provide them with a high volume South Korean market. Jerry, this is good news, but how big of a good news is it? Because Busan's only got like 3-point-something million people. Is this going to be a game changer? Like, oh, that's cute.
It's the exchange will be open to all of Korea, by the way, and probably a lot of Asia, of Asia. So that's one thing. I think what it is starting to signal, right? If you wanted to get like a signal from it, I think it's starting to signal that governments are looking at other ways to create revenue streams that are aside from taxation and the issuance of debt, which are the only ways governments can fund themselves, right? So if governments are looking at ways to create revenue streams that will create situations where they don't have to raise taxes and they don't have to issue loans, that's good for the country. The other element is that crypto zone in Busan that was put forth in 2019, that was to bring blockchain businesses there and create tax breaks for businesses to grow there. And what they were trying to tell you in the article is that from 2019 to now, it was private companies taking advantage of it, not municipalities.
Yeah. Okay.
Which is a relatively new thing, right? I mean, we've heard El Salvador is going to have Bitcoin mining as a country service thing.
Right.
This is another one of those deals. I think it's interesting.
Yeah, it's interesting. But like you said, like we talked about before, it's kind of like if the government gets involved and they own essentially a private company. It's a company that's owned by the government itself. Now it's almost like the government is opening up grocery stores all around and like, hey, here's our stores, come to our stores. It's good for taxes. I mean, look, Miami's doing something. I mean, something in these same regards, but that's more of like an investment vehicle, not an actual company. Let's see how it works out. I think it's good. Maybe other places be like, hey, I want to do that, and I want to track more businesses because we're tapering off. And that would be that.
Downsides, right? Look at Venezuela. And what they did with their oil company. The oil company was wonderful. It made a lot of money, and what they did is they took the money and they squandered it.
See, this is it. This is the problem with big governments. And this is always the problem, right? Because who was it? President Reagan said the problem with government is government itself. And that's really what it comes down to. So yeah, we're going to see this thing, but government can still get it right. They still, Law 230 came about. They said, hey, we're going to distinguish between what can actually constitute an actual website, so where people can't get sued by the values and opinions of what is being said on their blog posts and stuff like that. And it worked out great. It was minimal. But here, I think it might be a little bit different.
Yeah.
And then that would lead me to our last point. Jerry, we've almost talked for 40 minutes.
Well,
Jerry's got a Patreon. And the things that I want to talk about before we get the Q&A is, so Jerry's got a Beyond Moon Investment Club, which Jerry, come on, got to work on that title. But it doesn't matter. It's good stuff. But what the thing that I'm interested in is your yield generation.
Well, okay. So if you've watched this channel for a long time, he's talked about DCA. Right. There is actually a very large number of us crypto investors that don't have extra income to continue to, on a daily, weekly, or monthly basis, invest in crypto. And so one of the things and I'm one of those people. So one of the things I worked on all of this year, heavily this year, was the ability to take what I've already invested and have it generate a yield. And then I can decide with that yield how much of it needs to go to my checking account to buy my food and pay my rent, how much of it needs to go directly into Bitcoin, and how much of it needs to go into this development I'm building here in Costa Rica, et cetera, et cetera, et cetera.
So, but I know there's some risk in it, and you've taken your profits out. I mean,
Well,
but you do it
obviously-
continuously. Yeah.
So here's the goal with anything. If I put $1 in, I want to have a reasonable expectation of when that dollar is going to be returned to me. It's called return on investment. So everything I do, I use a lot of math to figure out what is my reasonable expectation if I make this investment, and is that time frame worth it, right? Do I
Right.
see other macro factors? Are things, is it good or
Right.
bad? Is it a good idea or a bad idea? Now, not everything I've done is I've come out smelling like a rose, but over the course of this year, I must have 5 or 6 different wonderful investments that have not only paid for themselves and returned every dollar plus a poop load of profit, but they continue because their yield spitting me out yield every single day.
Yeah, and this is, and to make this crystal clear, this is not like a Celsius thing. This is like we
No.
invest into the crypto product themselves. One of those is, and we talked about this for like half an hour. The Cosmos project, and they're different tokens and yield that they generate on their different other products that are within the ecosystem. I found that to be fascinating to do something like that, because it's not perpetual and it gets risky as time goes on, but